Hello everyone, I'm Cindy. My group members are Joyce and Eve. Our topic is 2007 to 8 financial crisis. It also be called as the subprime mortgage crisis. First of all, I want to make a brief introduction of this crisis. It was a bankruptcy of the subprime mortgage institution caused by the property bubble burst. Many investment institutions and commercial banks were in debt, and the stock market crashed. Finally, it spread from the American to the world. Today, we will focus on the three parts of the crisis: reason of the crisis, global imbalance, and global influence. I will talk about the first part, why the crisis was happened. The first reason is economic weaponization. In the substantial economic, U.S. depend on three major industries get the huge economic growth and large number of jobs. Follow the economic development. Role of the financial leverage is more attractive to investors to choose the virtual economic market. For example, bank would be pack and sell most of their loans to securitization companies. Investment bank, pension fund, insurance companies will buy this security by cash. Mortgage-backed security is a typical of the bank asset securitization. The securitization of the subprime mortgage into MBS and CDOS was a major factor in the currency. My second reason is encouraging economic recovery. House price continued increase from 1990 to 2006. It is a good choice for long-term investment project. The federal interest rate was 6.25% in 2001. It even decreased to 1% in the middle of the 2003. Lower interest rates ensure encourage house and mortgage market and indirect effect lending requirement to be more relaxed. Bush government mentioned American Dream in 2004. He introduced the ownership society, such as a zero down payment plan. The third reason is the government supervision is not strict. Financial institution has relaxed lending standard and inaccurate credit rating. In the evaluation process, there is mortgage fraud. Compared with traditional mortgage, subprime mortgage already accept more people with lower credit rating. This financial institution will face more and higher risk under this situation.
Finally, I will talk about speculative and moral hazard. In speculative, subprime borrower will use opportunity of increasing in house price to repay their loans. If house price is flat, they cannot afford their loans. In moral hazard, this bank depends on the securitization transfer risk to outside investor when these loans default. Large investment companies ignore high risk of investment. They believe government will help them when they fail because they are too big to fail. Here I'm gonna talk about the global imbalance because many economists believe that the global imbalance caused the financial crisis in 2007 and 8, and the imbalance gap are increasing. Here are four parts I'm gonna talk. According to our textbook, we believe that the US is a large open country, which means if the policy influences the current account, it will influence the global international rate as well. From what we learned, we know that the current account can run permanent deficit. But when this phenomenon into real life, it will lead to the global imbalance when the country's current account not equal to zero in long term. And here is the picture to show that from 1997, the current account gap between US and other countries are getting bigger and bigger, especially the pre-crisis period. Also, I will focus on the imbalance between US and China. Then why global imbalance happened? First reason is the difference of consumption pattern. People in US always borrow money to spend, and the people would like to use credit card rather than cash, which means people in US will always get goods before they actually pay. On contrast, people in China are always saving money for unknown future, and there are many older people will save their money in the bank for the younger generation. Also, I remember an essay our professor mentioned during the class about the one-child policy, which are published in China from 1980s. The author mentioned that the China's household saving rate has been increased at a rapid rate. The average urban household saving rate has rose from 12% in early 1980s to about 30% in 2010. The one-child policy influenced saving at both aggregate and the household level. Also, household consumption and the saving decision has been changed. And here is the graph to show the gross saving between US and China. So in my opinion, US is always a borrower, which sell their asset to get capital inflow, which means they only need to pay a little interest payment to use huge capital to improve their infrastructure and technology. And the second reason is the production structure change, which I will call it China shock. China as a new rising country from 1980s, there are less people believe that China will become such important role in global economy. But in 1990s, the manufacture export from China had a booming. And David believed that manufacturing has been a driving force behind China's economic turnaround. And China's share of world manufacturing value added has increased. Also, based on the improvement of China's productivity and the transportation cost decreased, more investment is shifted to China from US. First of all, it decreased the US export. When China has lower price of goods, which gives more stress to US manufacturing, industrial, and export. When the degree of integration increased, which led to international trade also increased rapidly. The outsourcing behavior also increased the export and import in China. All in all, there are many capital transfer to China, which caused the global imbalance and the gap are increasing. Then how global imbalance influenced financial crisis. Most economists believe that the financial crisis in 2007 and 2008 are caused by oversaving, which gives more confidence to US creditor. As Cindy mentioned before, from 2001, the FED decreased the interest rate, and the government hoped to incentive US economy through house buying. Therefore, the rest of the world oversaving gives US people a fake confidence to borrow more money. Also, they believe that the saving glut will lead to lower interest rate. On the other hand, the saving glut gives more chance to individual investor to prove lower interest rate and more risk investment to financial market, which lead to the financial market turmoil. Well, there are opposite points to claim that the current account cannot show the financial borrowing, lending, and the path of capital flow. We cannot simply say the financial crisis is caused by global imbalance. On the other hand, saving is not equal to financial, which means the saving glut is not the main role to explain the low interest rate. As I mentioned before, the FED reduced their interest rate first from 2001. And the lower interest rate is the reaction on policy made by central bank, market prediction, and the risk premium. But we can conclude that the saving glut may cause the risk individual investor floating, which accelerate the financial crisis. But it is hard to say the global imbalance is the main role cause financial crisis. And here is the influence of the labor market. Normally, the labor inflow and outflow show the predicted trend. But during the financial crisis, many countries' unemployment is increased to the unpredictable level. The main reason is that there are a bunch of companies crash, leading to huge unemployment happen.
I will talk about effects of financial crisis on financial market and the real economy, and we will focus on the US market, the Euro market, and China market. The subprime crisis induced the debt crisis when borrowers failed to pay the interest payment and principal repayment untimely. Also, it induced the liquidity crisis, which is financial institutions cannot satisfy the creditors' demand for the realization. Therefore, the credit crisis was invoked as well. Because number of borrowers defaulted and the banks dried up their reserve cash, number of financial institutions in US crashed, such as Countrywide Financial Corp, Bear Stearns, and American International Group. One of the important money market fund, called Reserve Primary Fund, announced to break the buck. Because the collapse of US financial market, capital chain was broken, nations' wealth and borrowing decreased. Therefore, the investment and consumption reduced in the US. The US real economy was in recession, such as the real estate, steel industry. Also, capital-intense automobile industry filed for bankruptcy protection. US financial market is big enough to spill its crisis over to the Europe, since European financial institutions branches in the US purchased a lot of financial derivatives. Trust between banks was crushed. Also, the lending and borrowing was stagnated. Therefore, the European real economy was hurt. For example, Germany's output contracted at annual rate of 0.4% in second quarter and 0.5% in third quarter in 2008. Since Europe is banks and business collusions from very beginning of the modern Europe capitalism, shortage of the capital made firms have few financing alternatives. Therefore, the normal operations and investment were affected badly, as demand for its import decreased because of the economic recession. This influenced countries who export to the US. For example, even though China remained a relatively high growth rate, the growth rate started to drop from 2007. 0.38% growth rate dropped from 2008 to 2009. Also, because the crisis pushed the US and Europe into recession, China export dropped sharply to 2.2% from 20% in the October 2008. Because Chinese financial market was regulated strictly by government, Chinese financial market was not affected a lot. Investors who suffered loss from US estate market generated general flight to the safety. So the Chinese net foreign investment dropped firstly during the financial crisis from 2007. Then it rebounded to the almost pre-crisis level in 2010. Chinese stock market crashed. Two-thirds of its value wiped off in 2007. People started invested to property-like estate. So a bubble started in China real estate market. Government adopted policies to short and shallow the crisis. For example, the Federal Reserve announced the 7 interest rate cuts from 2007 August to June 2008. Government fund debt and mortgage and freeze the consumer debt market. In China, government adopted state-oriented investment program and adopted loose monetary policy. European central markets coordinated their interest rate reduction and implemented government spending program. We broadly conclude the origin of financial crisis and its influence to the world. Also, we explain the role of global imbalance in financial crisis and the government's policies response. Financial crisis is painful and profound for the economies globally. Governments should learn from it and take precautions. Thank you for your patience today.